Welcome to Shark Cap Table Fast, the 1-minute deal maker for sellers and buyers of equity that helps you keep your arms and legs. Today we're going to be sellers or people that are going to structure a deal to raise money. Now first we have to be sure that we have this set up properly. So we want to make sure that sell shares in the red shows. We could change to something other than Shark, such as investor or VC, but I kind of like Shark. It's fun. However, be sure to change it back if you get ready to send anything out, because people don't like to be known as sharks. And I would hide all the help, even though we have a lot of help. It basically clutters the screen if you're at first not familiar with the help. So we're going to hide the help. Now we're going to scroll over and we're going to start. It's that easy. First, we're going to put some founder investment in. Let's say there's $15,000. And because of all the additional valuations, such as, we're going to bring this over here, detailed valuation, any beta test revenues, intellectual property or patents, quality of management team, market size and ability to capture share, other tangible or intangible assets, or use what is generated from the sheet over here, the valuation. Okay. Now here we've actually got some details, and here's the 400 that we put into it. But we could use these. Any of the blue numbers or words can be changed. You can't change any of these guys because these are headings and they're locked. So if you want to get in the details, go to the detailed founder valuation. If not, then just use what you got here. Okay. The shares and the amount of dollars are linked. As you can see, at 1 cent per share, 15,000. Notice when we're increasing this to say 20, this goes up to 2 million. And if you reduce this down to say 15, it takes a little while because we've got some spinners. There. Now there's your 15,000 again with 1.5 million shares to the founders. Now we need to offer, I'm going to move these over a little bit because they're very annoying even though they're helpful. Now we've got to put an option pool in. Let's put about 15%. Professional investors like to have option pools because they provide an incentive to new managers to work extra hard. And by the way, it dilutes the founders but not the sharks or the investors. So having said all that, we now have to put the shark investment in. We're going to try for $300,000. We're going to sell the company, we think, for $2 million in, say, year 4. And now the important one is to play this game. You think your company's worth $415,000. You might be lucky to get $350,000 from the sharks. They never give you what you think you're worth. So having said this, let's look at what kind of a deal has been temporarily constructed. So options have 7% of the fully diluted ownership stakes, founders 46.8%, and the sharks have 46.2%. Ooh, there's a slim majority there. Founder gets 62 multiple, as the shark has a 3.1. Founders have 181% internal rate of return, and the sharks have 32.4%. Now you see green over here, that's good. It means that the founder actually has voting control, because remember, in this case, options don't vote. This is the same ratio as this. But these are the total percentages of voting shares. Now, I don't like this. For measly $300,000, you're going to give away 49% of the company. So what can we do? Well, we might try to convince these guys that we could sell for $3 million in year 5. Well, that really didn't help us that much, so I'd stick it back to 4. It's amazing what time does to valuations. Next thing we might do is try a little less money. Maybe go down to $200,000. You're going to have to come back to the well sooner or later. Now, you still have a nice, healthy margin. That's basically a 60-40 deal for $200,000. You know, they get 3.6 and 38.1%, so it's okay. Let's go back to the 300,000 and let's try something else. Maybe we could put some more money into the company. Maybe we get up to $50,000. Now you say, well, If we had all that money, what do we need the sharks for? Well, you might go out to your friends and relatives and get a little bit more money or dig into your own pockets. Now, with a $450,000 valuation, and it's a bigger percentage of cash, you might have the good luck and fortune to convince them that you're worth $400,000. Now, you see, that extra 50 bought you some percentage points. That might be a reasonable deal. And if you had to give them a little better return, you might ask for a little less money. Now, that didn't really do much, did it? 30%? 250? Let's stick it to 300. All right, so maybe you got a deal. Now, don't forget down here we have a concatenated statement which takes all of the key numbers and puts them into a nice sentence or two, and you can cut and paste and put it into Word. You can edit it, or you can use it for your stand and deliver pitch or your business plan or executive summary. And don't forget that we've got a lot of help that is popping up here. And that is it. Thanks very much.